Hi investors, today we look at how you can beat the stock market in one move. And yes, I said one move, and literally I'm gonna show you evidence that is proven over time, not just 1 year. And this method is incredibly simple and totally foolproof. My name is Marco and let's dive straight into it. Now, first of all, we need to understand what the stock market is and where the baseline is as well. And the baseline is normally intended as the S&P 500. That's why I have this Wikipedia page open on the screen. So the Standard & Poor's 500, which is basically an index that tracks the performance of the 500 largest companies listed on the exchange in the United States. And so that is gonna be our baseline for this video as well. And guys, what I'm about to show you is not something that many people know. So what we have now on the screen is the S&P 500 information technology. It's one of the sectors of the S&P 500. It's very, very important for this strategy because basically that's actually the main step that you have to take. So let's have a look at it real quick. Now, the white line is the S&P 500 information technology sector and the S&P 500 is the blue one. As you can see, that's over 1 year and more or less the two indexes are on the same level. As you can see, there are not many changes, but things really get lit when you compare it over 3, 5 and 10 years. So let's have a look at 3 years. So 3 years, you can see that the S&P information technology is actually way more profitable. After the first year, which was the 2018 till 2019, we see that the information technology sector actually takes off like nothing. And okay, we had a big crash in 2020, but same thing applied to the S&P 500. And after that, the S&P information technology actually took off and returned the beauty of 2 times the initial investment. As you can see on the screen, I'm gonna zoom in for you. But initially we had $100 and at the end of 2021, based on yesterday's data, we have $200 versus the S&P 500 that gives you one and a half, just one and a half. But get ready for having your mind blown because we're gonna have a look at 5 years. So we start with both the indexes with $100 each, and then looking at what's happening today, we see that information technology has got more than 3x the initial investment, actually to be precise 3.5, whereas the S&P 500 just doubled your money, just only doubled it. And now to actually really make you cry and actually just say, Marco, this video is gonna really change the way I think about investing, let's have a look at what happens over 10 years. So we start again with $100 each, and then go into today, the information technology sector has gone up 6 times. So you have 6x your money, whereas the S&P 500 only 3x. So it's 300% your initial investment. And if you want to start investing now in the S&P 500 information technology, it's very easy. Just look for IITU. That's the name of the ticker. It's now on FREETRADE. If you live in the UK, just get yourself the account on FREETRADE, like I said, using the very first link in the description below, and it's on other investing apps as well. That's not just for the UK. If you get yourself an account using the link in the description below, you would get a free share value up to £200, and that's a good way to start. But now, what if you want to take things further? You want to actually take more risk but have even higher return, and all of this without even having to do much more work. You just pick a few stocks and you just have to nourish them over time. Well, that's even very easy, and I'm gonna show you the results over time compared to the S&P 500. And guys, what I'm about to show you really something that some people are gonna think, this is crazy, why are you showing these secrets? Now we cannot make any money on fees and charges, because that's how financial advisors work. And by the way, this is not financial advice, so don't sue me, bro. Invest at your own risk. So let's have a look at it. Now, this is a backtest portfolio asset allocation. So what I did, it's over 10 years, so 2011, 2021. If you invest $1,000 and there is no reinvested dividends, because I thought that's just too boring and annoying to go and reinvest your dividends, let's not not even put that. The benchmark, like I said, is the S&P 500. And then what I picked was simply the biggest tech stocks that are now in the market. Like, I'm not picking small stocks and high risk stocks. I'm picking stocks that have a very long future, bright future as well, and that they are creating a massive monopoly. So we have Apple. Well, I guess you all know Apple, Microsoft, Amazon, Facebook, and Google. Each one of them is 20% of the portfolio. Now, I'm gonna click again, analyze portfolio for you. And as you can see, that's the chart now with these 5 stocks, 20% each. Literally, you go absolutely blind and stupid. You just plunge 20% of the allocation on each stock. Just very simple. So portfolio 1, which is the one that I created, versus S&P 500. If you had invested it 10 years ago, you would have almost 10x your money. Yeah. If versus the S&P 500, and you would have just tripled your money based on the S&P 500. Well, what's really gonna really blow your mind is the comparison over 1 year. Just if we pick this year alone. So from 2020 to 2021. Now we go down and we see that our portfolio actually overperformed the S&P 500 in just 1 year and 6 months. And it has returned an additional 30% compared to the S&P 500. Also, if you consider that the owning single stocks is actually cheaper from a fee point of view, you don't have to pay any fees with single stocks. Whereas with the S&P 500, you actually have to pay fees because they rebalance it and they do all sorts of things with it. And if you want to increase your returns, there are some more things that I'm gonna show you in a second. And again, it's very simple stuff that you can action in your very own portfolio without any help by any financial advisor or long-winded course on the stock market. If you have enjoyed the video so far, join the investing family here on YouTube. I want to put out more videos like this one so that you get the best return in the simplest way that you can possibly imagine. And also get yourself on the free Discord channel that is on the first link in the description below. And yes, I said free. There are already 700 people there to talk about investing, so get yourself on it. The secret is to actually look for companies with very strong revenue growth in the future and also very strong popularity. Let's be clear. If a company has got a very strong potential revenue return but no one knows it, there is a very good chance that it won't get actually any traction at all. And at this point, you could actually spice up your portfolio with some other stocks that you might think are gonna perform well over time. So that would be your Tesla, that would be your Nvidia, or maybe even Palantir. These are the stocks that I suggest you look into, but bear in mind that these actually carry more risk and potentially they will not overperform the market. So bear that in mind and really look at actually join my Discord group, because we always talk about this kind of companies and it's gonna be very interesting for you. And it's totally free. And if you enjoyed this video, subscribe and also have a look at this video that the YouTube algorithm thinks that you're gonna like a lot. So click on it. It won't play on its own, so click on it. Do it right now.